right, good morning, everyone, or good evening, depending on where you are in the world. My name is Darius. I'm here with my colleague, Tanya, and Professor Sebastien Betermier. Tanya, I'm co-leading this year's edition of the MIPC. I personally lead our logistics, media, and external outreach portfolios.
And I take care of corporate relations, so really anything that has to do with our sponsors and with matching them with the right students in terms of recruitment. Now, we're extremely happy to have the chance to speak with you all today. And although, as you know, this year our format is virtual, as always, we are committed to giving you the best experience possible by continuing to create meaningful opportunities for you to connect with like-minded students across the globe. Now, for our fourth edition, we're actually welcoming 93 teams around the world. And this is very, very amazing for us. You know, this is actually a record. In the past, we have had around 90 teams join us, but we've never been able to really beat that 90 teams mark. And they're coming from over 15 countries across the world and 56 different universities. So not only are we beating our previous numbers in terms of teams, but we're also beating them in terms of diversities. And, you know, we're truly, truly impressed by your dedication, even in those difficult times. And we look forward to seeing what you come up with. Now, as you know, every year our goal is to release a case that provokes thought, that doesn't have an obvious solution, and it really invites students to go beyond what they've learned in a classroom. We give a prime opportunity for all of you to actually come up with institutional level solutions and present them directly to executives of some of the world's leading asset managers.
Yeah, absolutely, and this year is for sure no exception. So for today, we have Professor Sebastien Betermier, as I mentioned, who launched the MIPC years ago and has been working with a class of students for the past 8 months to write and produce the case. And he's going to be walking you through just sort of the high level what the case is about, and then sort of best practices on how to write an excellent proposal for the MIPC. So following a formal presentation by Professor Betermier, we'd like to have a pretty interactive session with all of you today, where you all have a chance to ask us questions live. So please, at any point throughout the presentation, please feel free to write your questions in the Q&A box on the right-hand side of the webinar, and then we will address them later in the session. So with that, I would like to pass it off to Professor Betermier.
Thank you, Darius and Tanya. Good morning, good evening, everyone. We're excited to welcome you to the 4th edition of MIPC. The theme of this year's edition, it's a particularly interesting theme. What we want to explore is how long-term institutional investors can play a role in addressing the rise of social inequalities and protectionist tendencies. This is a theme that we observe around the world. We're observing social inequalities rising. We're observing protectionist tendencies rising, not just in the UK, in multiple countries around the world. We're seeing these effects being amplified by COVID. And a key discussion among institutional investors right now is how to invest in the midst of this uncertainty. And so this case is going to be a good opportunity for you to work on this problem. And we're going to focus on the UK. So we kept the theme secret until now. We're going to focus on the UK because it is a perfect example of what is going on right now in the world. If you observe the UK, it has the 6th highest ranking in terms of income inequality among OECD countries. And we have Brexit, right? We have the UK moving away from the European Union, a large rise of protectionist tendencies there. And so it's going to be a great example for us to study this theme, and we're going to do it in the case of a new sovereign wealth fund. So that's the BNSF. It's a fictional fund. Everything is fictional in this case, but when you read it, the numbers that we took are based on real facts in the UK. The idea is the following. It is quite costly for the UK right now to subsidize populations in need as the result of COVID. And from a long-term perspective, it raises the question, what if it were to create a new sovereign wealth fund that can address these needs while being financially profitable at the same time? right? So how do we combine the financially profitable with the socially equitable? And so we're creating this new fund. The sovereign wealth funds exist. I mean, they've been there for a long time. I mean, think of the Saudi Arabia fund, think of the Norway fund. But when you look at the bulk of the sovereign wealth fund, they tend to be primarily commodity-based funds. So you take a country that has a lot of oil resource, and then they would like to diversify that resource for the future of the economy. And so they'll invest around the world in everything but oil to guarantee a stable future. This is different. This is very much a new fund whose job is to make the UK more economically independent, more socially equitable, while being profitable at the same time. And so the big difficulty of this year's case is the fact that you have a triple mandate. The fund not only has a mandate to promote economic independence in the UK, and by economic independence, that means make the UK less reliant on external supply chains that we have seen in the case of COVID have been painful to the UK and other countries. Even Canada has been quite affected by this. The second mandate is to promote long-term well-being of the British population. And so here the idea is that we don't want this fund to be good for just a few. How do we promote this fund to be in the best interest of the entire British population? And three, of course, we want to maximize risk-adjusted return. This has to be a profitable venture in the end. And that is the mandate that you all know how to address when you are building a long-term portfolio strategy. The difficulty is how do we integrate this third leg of the mandate with parts 1 and 2? And these are the ones that are introducing some tough trade-offs. So we have set up a £50 billion fund for BNSF. The first 20 billion are going to be installed in January of 2021. The board is new to this. They're considering how to devise an asset allocation, and they have hired every single team to be a consultant to propose an allocation, and then they will choose one that best fits the mandate of this case for the fund. The reason why this is an interesting case to work on. First, it's a new type of sovereign wealth fund. So you start with a blank slate in a way. We do have examples of sovereign wealth funds that exist in this mindset. Think of the Irish fund, think of a recent fund established in France, think of a recent fund established in China, but still, it's actually quite new. And so it's raising an interesting question about how to devise an asset allocation for such a fund. Second, you have a triple mandate, which is very difficult to manage. You no longer have a classic optimization where you try to maximize risk and minimize returns. Now you have to take these additional parameters into account. You have more stakeholders involved. Third, you have to make long-term decisions right now in a world that is changing. I mean, think of the level of uncertainty that is going on in the UK at the moment. It's huge. And so how are you able to devise right now an asset allocation strategy that is sound and robust to the multiple scenarios of Brexit? And then finally, it makes you think about how finance can have a positive impact on society. Finance, if done well, can have a lot of positive impact on society. But here, it is very clear. There's a mandate to do good for the total population. And so how can the fund achieve that? And so this is a very good objective to try to achieve. As you know, and this has been explained in the report, the first deliverable right now is to provide a report. Okay? So in that report, you want to include an executive summary, and I'll tell you more about it. A report, the detailed report itself, which could be up to 7 pages, no more than that. And you can have an appendix, which is as long as you wish. The report should be self-contained in the sense that the reader does not have to go to the appendix to understand what is in the report. But as you can imagine, to build credibility, having an appendix that show the thought process behind some of the calculations makes a lot of sense. And there's no limit to how long the appendix can be. There's 3 evaluation criteria that we keep giving to judges year after year. The first one is the overall quality of the report. And then when you present for the semifinalists, the overall quality of the presentation. Is it professional? Is it clear to understand? Is it concise? That's important. The second one is the analytical rigor of the proposal. At the end of the day, if you have a $20 billion proposal that is going to be implemented, you want to make sure that it is based on sound assumptions. And so it is important to be rigorous here. And to be clear, to go back, I'm seeing a question here, to go back to the previous slide, you can format these reports however you want. The executive summary can be single-spaced, double-spaced. The report, you can make it triple-spaced for all we care about. At the end of the day, you choose how you want to present that report. All we ask is that it does not exceed 7 pages. And of course, we will evaluate how well presented that is. So that decision is going to be yours, but you have the flexibility. And finally, the third part, which is the most important of all, is the ability of the proposal to solve the problem. At the end of the day, there's a clear problem. How do we fulfill the triple mandate in an optimal way? Does your proposal have a chance? Right? And so that is going to be the more important pillar of the 3. Are you able to solve this problem? Now, you're going to play the role of a consulting team. And so you are not limited to the information in the case. This is an open-ended case. You are free to use any public resource for this. What's important to us is that you cite those resources, that you are transparent about what you use. But if you were going to choose a career in consulting down the road, you would do exactly the same. You would do research based on the available information to you. You would go above and beyond what is available in the case. And we encourage you to search for that type of information. We just ask that you are clear about the assumptions that you make so that we can follow the data that you use. We trust that the data that you use is real data, but you have the flexibility to make use of whatever data you have available. One important point, very important point, is to look for win-wins. Again, we have a triple mandate here. And so in that sense, the case is a little similar to the case from last year, where there was a double mandate from the fund it was a fund based in Newfoundland and Labrador that had to address climate change. And there was a double mandate involved here. And what we found from the very winning solutions was they were able to address all the multiple trade-offs by finding win-win solutions, right? So an investment strategy that ultimately grows the pie, that ultimately addresses the needs of all the stakeholders, right? And you want to think about it this way, because at the end of the day, when you have a very segmented board with different views, at the end of the day, you need to address their needs. And at the end, the proposal will be successful if you can address the needs of everybody on that board. And you might come up with very different solutions from one another, but you need to look for those win-wins. And we have highlighted at the end of the case a lot of tough trade-offs that you would not necessarily think if you had to come up with a typical asset allocation strategy for a traditional fund, but now you do. For example, it might be in the fund's best interest to support declining industries that are necessary to the country's economic independence. It might not make sense from a financial profitability, but it might make sense from an economic independence. And so how do you resolve that trade-off? Is there a way out of this where ultimately you can satisfy both needs? Second, this is a point where many teams fail. And it's normal because you're coming out of the university and you may not have a lot of insights on the pragmatic aspects of the proposal. But the point is, the judges who ultimately will evaluate the reports are going to be industry experts. And so they care about the feasibility of the proposal. They are putting themselves in the shoes of the corporate board of that fund. And as decision makers, they are thinking to themselves, can I implement this? Yes or no? Has the team convinced me that this is a feasible proposal? And this is hard, but at the same time, whenever you're going to join the real world, this is going to be absolutely key. Is the proposal that you have might be creative, but is it pragmatic enough at the end? Can you implement it? And so you're welcome to get advice from practitioners. even as you draft a proposal. Use them as sounding boards. The ideas must come from you, but you are welcome to use practitioners as sounding boards to see whether the proposal that you have come up makes sense. Because at the end of the day, these will be some of the questions that you're being asked. And part of the value of this challenge is that it makes you think above and beyond some of the typical coursework in finance, where you think about the theory, and now you're being asked to go one step further and think about whether it's feasible in practice. What you need to keep in mind is at the end of the day, there's no single winning solution. This is a very open-ended problem, and we kept it open-ended on purpose. We want you to be creative and come up with ideas. At the end of the day, we will not know for 20 to 30 years whether the proposals that you propose make sense or not, right? We're not evaluating them ex post. We're evaluating them ex ante based on how convincing that proposal is. And because there are multiple dimensions to this mandate, there could be multiple winning solutions. In fact, what we saw last year, and I was in the room when the decision makers, the final round judges, were evaluating the top proposals, they were struggling quite a bit to identify number one from number two to number three. They had pros and cons to each of them. And different members of the board had different views about which proposal should be number one and should be number two. And so this year, actually, we changed the prize structure so that we can award up to 3 teams with winning proposals to recognize the fact that at the end of the day, there might be more than one winning proposals, given the open-ended nature of the case. Right? So you want to keep this in mind. There's no one solution here. It might well be that the people you compete with have different types of solutions, and that's okay. This being said, however, even though there might be no single winning solution, you have to focus your pitch and you have to focus your report on why you believe it is the best. So we have 93 teams competing. As Tanya said, this is great for this competition because the quality is going to keep going up. But that means that you're in competition with 92 other teams. And you have to put yourself in the shoes of the decision makers who will evaluate which proposals are better than the others. It's hard based on limited information. And it's even harder if the teams are being descriptive about their strategy as opposed to being aggressive about why their proposal is the best. Why does it beat arguably all the other proposals out there? And so that should be your mindset. Why is it that judges should pay attention to your proposals more so than the others? And it might sound trivial when I say it, but I would say at least a half to 2/3 of the proposals that we've reviewed in the past do not make that clear. And so if you're not clear at the end about where's the value added from the proposal, you're much more likely to dismiss it compared to some of the others. And on that point, what is important for you to realize is at the end of the day, what matters are the results of your proposal. It is not how much work you put into it. So we have seen in the past some teams who put a tremendous amount of work in the proposal. It was a beautifully done analysis. However, at the end, the proposal was not feasible enough to be implemented, and so judges put it aside. And the team members could not understand why they were put aside actually and did not make it to the final round, because at the end of the day, they thought, and legitimately so, that they had put more work into it than the other teams. And they were right about that. But at the end of the day, the judges have to see which proposals make more sense. And so the amount of work that you put in, per se, does not matter. At the end of the day, the quality, the sharpness of that proposal will be what matters the most. And so you really want to make that clear to avoid the issue that at the end of the day, the main takeaways are buried at the end and the judges were not able to clearly appreciate it. Another lesson that we have seen from the past, and by the way, a lot of these takeaways, I'm bringing them back from the debriefings, the postmortems that I wrote after the competition. So I invite you to go back and read them, where I will go. You'll see these points coming back. Many of the proposals are not clear enough about the main takeaways of their proposals. Sometimes it takes 10 minutes in the presentation to get to what is so unique about the proposals. Or sometimes you have to get to page 5. That means that for 5 pages, the reader is finding its way, trying to figure out what is new. And in doing that, you're actually missing a lot of details from the analysis, as opposed to knowing right away where is it that you're heading, why your proposal is best, and then making a clear statement about why your analysis justifies that point. If you're much more clear about your results up front, it is going to be much easier to follow your analysis and to be convinced by it. And so we've noticed actually that some of the best proposals in the past actually had an executive summary, whether it was 1 paragraph, 2 paragraphs, that explained their strategy up front. And once you know that, it is much easier to follow the thought process afterwards. And so for this year, we're actually asking for an executive summary to begin with. It's the first year we're doing that because we believe that really adds value to every single proposal, and it will allow the reader to appreciate the quality of the analysis behind it so much more. This is a very important point. We have seen some of the most creative proposals. It's a little heartbreaking, actually. And I know all the proposals. I actually go and read through all of them, especially in the first round. We have a committee, and I make it a point to read every single proposal to make sure that we have a consistent evaluation of proposals across the board. Some of the most creative proposals don't make it to the finals. Why? Because when comes the Q&A with judges, they get grilled on technical details and there is not enough content to support it. And so on the technical side, those proposals fall out of favor. And then on the other end of the spectrum, you end up finding that some of the most quantitative proposals also don't make it to the final round because they fall short on the pragmatic side. And you don't fully understand why there was a need to go so quantitative when you had some key stakeholders that have been dismissed. And so at the end of the day, you have to balance both. You have to balance the creativity of the proposal, the multi-stakeholder analysis, along with analytical rigor, which is why at the beginning of on the website, we've emphasized so much the need to build a diverse team. At the end of the day, having the diversity really helps you. When you're going to pitch to the portfolio managers, you're going to be pitching to high-level executives who take the full picture into account. They need to see whether it makes sense, whether it passes the smell test, so to speak. And then on top of that, as they delve down into the proposal, they want to see whether it holds. So they might be tough with questions. And if at the end you're still standing, then they know that there's quality to it, that it's likely going to be a robust proposal. And so you need to have that balance. You want to be careful as well not to oversell. You want to be transparent about the limitations of the proposal rather than dismiss them. We have seen student teams being overconfident about an idea and dismissing some of the limitations, which ultimately backfires because at the end of the day, you have to realize you are being evaluated by experts whose job is to evaluate pitches every single day. They have teams working for them, making pitches for a particular investment strategy, whether it's an asset allocation pitch or a particular pitch to buy an airport, a stock, an investment in a new hedge fund. Every single time you're making analysis based on limited information. And they have to evaluate those proposals. And so they have a lot of expertise at teasing apart which proposals make sense from the ones that don't. And so they can easily assess whenever there's a flaw, they can smell it. And so you want to be cautious about not overselling because if anything, it's likely to backfire. It is much more optimal to be confident but transparent at the same time. A key suggestion is to find a sounding board. So a lot of the proposals that we read have a lot of good ideas in them, but also some glaring flaws, either glaring flaws in the analysis or the way it's being presented, glaring flaws that just stand out as soon as you read the report or you see the teams present. And again, it's a little heartbreaking because you know that a lot of analysis has been a lot of time and effort has been invested into the analysis. And there's some flaws that could have easily been corrected prior to the moment the team went on stage and presented to judges. And here, what we have noticed is that teams that usually have an academic advisors tend to do better. And the reasons they do better is not because the academic advisor give them ideas. It's because the academic advisor is there as a sounding board before the proposal comes to us. The academic advisor might read the report and say, you know what, it's a great idea, but you need to be careful about this. And so you fix it. When they see you present, they might give you some immediate tips and again, help you to fix those tips, those flaws prior to coming in on stage. And so being able to show the reports around before you submit it to us has huge value, even if you are doing it last minute, because it's a lot of work to do in the next 3 weeks. It's worth it to get that feedback. It's worth it not to wait until the last minute. And one innovation that we're doing in that regard this year is to launch a mentorship program. This will be for the semi-finalists only once they present, so that they can, again, provide a sounding board for the presentation and point some glaring flaws, and that will help you to raise the bar in terms of the quality when you have the real presentation. Some teams in the past, in fact, had 2 advisors, which is fine. But to tell you the impact that this can have on the quality at the end. Finally, this is a point that is more useful for the second round once you get to present. For those of you who will make it to the top 25, you need to prepare for confrontational questions. The judges are asked to be aggressive. I asked them specifically to be tough, to mimic what you can expect to face in reality down the road when you have a job and you're presenting a real proposal for $20 billion. And you have to think about it this way. Those judges, at the end of the day, they have to choose among many excellent proposals. It is hard to do so. And so tough questions are good, actually. Tough questions allow judges to see which teams really stand as opposed to the teams that fall apart. And you want to view it as an opportunity to differentiate yourself. Because when you have a tough question, it allows you to delve into an aspect of the analysis that might be tougher, but if you're able to answer confidently, it will really give you an advantage over other teams. So having tough questions actually is quite good. You want to polish your appendix. We have seen in some cases teams putting a bit of a data dump with a time series that take multiple pages or raw code. It is absolutely useless to do so. If anything, it backfires, because for those judges who want to access the rigor of the analysis, if all they see is some raw code, it will lose trust in the fact that you're able to present the results concisely and explain clearly the thought process. Not all judges will look at the appendix itself. Some will, some will not. At the end of the day, it's an opportunity for those who will to assess the rigor of your analysis. And all you need is 1 or 2 judges who go in there and start asking you questions about parts of the analysis. If you're able to answer convincingly, again, this will give you a lot of points. And you can see, if you look online on the YouTube, we have posted the videos of the winning proposals. You'll see that many of the best teams actually had very detailed appendices on their slides, so that whenever the questions came in, they were able to address all of them. And so the way you want to think about the appendix is a way to show the judges that you have left no stone unturned. You have thought about every aspect of the problem, and you can be convincing on that front. One way to be successful is to think beyond MIPC. At the end of the day, if you do a good job on this report, yes, of course, you'll go far in this competition. You might win. This would be a tremendous success. But actually, I would argue that the report you will submit will have value above and beyond MIPC. When you speak to recruiters, it is quite difficult for them to recruit purely based on CVs. So what they want to do is to hear about the thought process, which is why actually the MIPC is great for them. They get to see you in action present. And what better way to hear about your thought process than to have a case study above and beyond the coursework that you're doing right now, where you can work on an important societal topic and come up with real solutions. And so I would argue that at the end of the day, if the report that you have is really good, you can use it as part of your interview portfolio for MIPC, but for other interviews that you have down the road, this is going to be a great opportunity to show the way you think. And it's also going to be an opportunity to go above and beyond the coursework and show that you're able to work on an important and timely societal topic. Finally, I encourage you to check resources from previous years. We have posted pedagogical notes of winning reports on the MIPC website. This is the same class that I teach that writes together the case. Before they write the case, I ask them to study the winning proposals and write pedagogical notes. So it's a condensed version of the proposals from last year. They should be easy to follow. They're 2 pages each, and it's going to give you a sense of the thought process that goes on behind those proposals. And so we've posted them for the past all the past proposals. They're all on the MIPC website. You also want to have a look at the presentations of the previous winners. They're on YouTube. It will, again, help to give you a better sense of the mindset that it takes to go far in this competition. We will not be able to talk about the case to any team to maintain internal equity among all teams, but we're happy to chat about discussions about format and so forth, and I'm happy to take any questions right now.
Yes, please, anyone, feel free to ask questions you may have in the Q&A box on the right side of the webinar.
Is it all super clear?
We have 100 people in the webinar. Hopefully we got someone has a question. Okay, so we have a question that comes in. So to confirm, the appendix does not count towards the 7-page limit for the main report, right?
That's correct. Yeah. The report has to be self-contained. We do not need to go to the appendix to make sense of the report. The appendix is supplementary. The appendix itself has no limits on the number of pages.
Another question. Is there any particular format for citing that we prefer?
No. As long as it's clear, you're welcome to use any format. We just ask that you're transparent about the sources and we can make sense out of this.
Interesting question. How would you recommend we develop an intuition on what is or what is not feasible in our proposals? What are some of the common pitfalls you've seen on this topic from previous proposals?
That's a good question. An immediate reaction is I have seen teams multiple times with forecasts of returns that are not realistic. And so at the end of the day, you're coming up with an asset allocation. There's a threshold on the risk-adjusted return. I think we're requiring at least the gilts plus 2%. Now, if you cook up any numbers on the forecasted return of an asset class, you can always come up to a great positive forecast of the portfolio. The question is whether that forecast makes sense or not. And so sometimes we've seen that teams have a very optimistic estimate for a particular asset class, 10, 12, 15, 20, 25%. And then, of course, when you optimize and you have a substantial chunk of your assets in that, it's going to raise the return of your portfolio. So this would be one immediate reaction. Another immediate reaction, which was perhaps more relevant in previous cases, I'm thinking 2 years ago in the case of large public pension funds in the US, we had a fictional fund called Vampers, which was quite limited in its corporate governance. Many teams had a very fancy winning proposals, but it was not clear at all that these strategies could be implemented with a board that only had so many tools at its own disposals. And so again, here there was a disconnect between the strategy itself and whether it could be implemented by a board that was quite limited. So these are 2 examples, I would say.
Excellent. The next question is, to what extent do we need to elaborate our asset allocation strategies? For example, company specific on a company specific level, or sector allocation wise. What would be more clear?
So you want to be top down. At the end of the day, this is an asset allocation exercise. But the more detailed you are and show that you have done your research, the more convincing it becomes. So this is not an exercise in stock picking where you want to pick a few assets here and there in the UK. This is more of a top-down exercise when you want to think about a global strategy. But if you have examples to pitch that could fall within each asset class, that would help to support your arguments and come up with reasonable numbers.
Excellent. Again, is there any prescribed format for the written report?
No, but I do encourage you to look online at what professional consultants do. Don't think about it as a class essay. Sometimes we have seen reports like this that come in as a class essay. And at the end of the day, you have to keep in mind that this will be sent to professional judges that are used to observing professional reports. So I would take a look at the way BlackRock formats its own reports, could be consulting reports on particular themes. The more professional you become, the easier it will be to read, the more agreeable it will be for the reader. And generally speaking, this will give you good practice on how to move above and beyond what you typically do at the university. But the choice is yours.
So a quick question, when is the initial round report due? I'll just answer as Sunday, October 4th. And then we take a week to review the initial proposals and then come back to teams on Monday, October 12th, in terms of who makes the top 25 semifinalists. Does the next question? Does the 7-page written report need references in a particular style, such as APA or MLA or other
No,
standards?
as long as it's clear. And I believe the references are not part of the 7 pages. So the 7 pages is the content.
Yeah. Next question, do you have any tips for teams based in Asia? How can we level ourselves with teams based in Europe who have personal knowledge about Brexit and its effects to the British economy?
So I was blown away last year by how well researched the case was by Asian teams. And last year was a case about a tiny province in Canada called Newfoundland and Labrador. You might have initially assumed that Canadian teams would have had an advantage over the others, perhaps because they know the situation better. But I actually would say that looking at some of the top proposals, the best research proposals actually came from teams in Singapore that did an excellent job at researching the province and how to design an optimal portfolio. What's important is, so the Brexit is one thing. And yeah, I mean, the more you do research on it in the UK, of course, the better. But think about what strategies have been implemented in your region of the world that you could potentially contribute to the challenge. So one of the nice aspects of this challenge is that we're getting student teams from all around the world who have different viewpoints. And so bringing that diversity of thought is actually quite valuable. And so my initial reaction is you're not at the disadvantage coming from Asia. We're trying to have different cases at around the world, different years. The experience so far has shown that teams quite far away from the case do extremely well.
Our next question is, what sort of timeline is decided for in terms of your forecasting and your proposals? Like how far out is quote unquote long term?
It's up to you to decide. At the end of the day, this is a $50 billion fund. The first installment is coming in January. The fund needs to survive in the next few years to make sure that it's successful. So perhaps going all the way to 50 years horizon is too far, but perhaps 5 years is not enough. So this is up to you to decide what you think is appropriate. I would suggest that anywhere from 5 to 15, 20 is reasonable to start with.
Mhm. Next question, are we able to create multiple portfolio allocation strategies, for example, a strategy for each Brexit possibility?
It's a good idea because it shows that you're having contingent plans, but you want to have one asset allocation that can be implemented as of January. So perhaps you might argue that, look, from the moment in November to January, many things can happen. But at the end of the day, the board is going to vote on a winning strategy as of November. And so it needs to be simple enough that you have one proposal that can be voted on that can be implemented later in January. Now, if you want to have some contingencies in there, you're certainly welcome to.
Our next question is, how much of this competition is statistics analysis?
It's both. And this is a point that I was mentioning earlier, and I want to emphasize. At the end of the day, you find that the winning teams are not only really good on the quant, but they're also really good at thinking of the bigger picture. And so I encourage you to look at some of the winning proposals from the previous years. And when you look at the pedagogical notes, or when you look at the presentations in the appendix, you will clearly see that they have done a lot of work to ensure that the portfolio is robust. So it's both, but you want to strike the right balance.
Next question, are there any assumptions or restrictions on our asset allocation strategy?
No, this is a change actually from previous years. This is a brand new fund. It is being created as we speak. The one predefined aspect of it is the triple mandate. It's up to you to take the analysis from there and propose an asset allocation strategy. So there's no additional restrictions.
Our next question
You can invest abroad. You can invest locally. You can invest in small caps. You can build national champions. What's so interesting about this case is that it can go in multiple dimensions, and we want you to think about that.
Mm-hmm. Our next question is, are teams allowed to speak to past winning teams about their thought processes and perhaps look at their full reports they submitted to help, or no?
It's a good question. This is outside our control. We will not put you in. Let us come back to you on this point. We're all about sharing information, but let's make sure we can come back to you on that point so that we can have a. It's a good question. It's the first time we're having it. Let's come back to you on that question.
Okay, we'll distribute something later on. Small question, is the executive summary part of the 7-page limit?
No. You have an executive summary, and then you have a report. It doesn't have to be 7 pages. You have an additional report where you have up to 7 pages, in addition to the executive summary, references, and the appendix.
Our next question, in the case, should we consider the bond expiry date after which all the money must be paid back?
You can, but this is less an asset liability management case than thinking about the triple mandate itself. So in the past, we have looked at very asset liability driven portfolio strategies for pension funds. This is less of a focus for this year's case.
Mm-hmm.
The complexity, as you can see, is elsewhere. It's very much on that triple mandate.
Mm-hmm. Our next question, so when you reference the BlackRock as an example for what a good professional report looked like, was there anything particular you were referring to? Or is this
We're happy to provide templates of well-written reports, and we can get back to you on that. We do want to be conscious. We want you to make that decision. So part of the reason we're keeping this case open-ended is we want you to make decisions on what you believe is the right strategy and the best way to present information. So happy to provide a few templates to guide your thought process and make sure that we're all on the same page, but you should not view that as the template to adopt.
Our next question is, how many years should the strategy be? 20 years, 5 years? Maybe perhaps already answered that before.
So you're welcome to come up with multiple stages. So what we have seen in the past is there's a long-term strategy, but you have an initial stage, a middle stage, a late stage. What we want, so what is really important right now, the most important is to have an asset allocation that can be implemented as of January 2021. Now you might come and say, hey, this is a long-term strategy and this is how we plan to evolve it over the future. That you're welcome to.
Mm-hmm. Our next question is, in between the, I guess the first round, the semifinal round, and the final round, say the Brexit situation changes in the world, will we be allowed to change our asset allocation and investment strategies to suit the new needs of the triple mandate?
Yes. So the way we are looking at it is the first round is there to identify the top 25 teams. It doesn't mean that your work is done. So once you know that you're part of the top 25, then you have 1 more month to work on your proposal and fight for the top 5 and the top prize. And in there, if you want to make changes to your proposal, you're welcome to. We will not send any semi-final round judge. We will send them the revised proposal that you're welcome to submit to us at the end of October. So the answer is yes.
My next question is, do you have any tips on where we can start doing our research or what to start doing to come up with ideas for the proposal?
Yeah, so if you look at the case carefully, we gave you examples of sovereign wealth funds with similar mindsets that already exist. In particular, the Irish fund has the most in common with the British fund. That does not mean that you should adopt exactly what they do. Think of it more as a starting point. And so I would recommend that you take a careful look at what they do. This will give you ideas of where to go. But I would encourage you, what is really nice about this competition is the fact that you're coming up with this case, again, as a blank slate. And so you don't have the experience that a portfolio manager might have after 20 years of work. And so your mind, in that sense, is more open to new ideas. And we want you to explore those ideas. So take a look at those existing sovereign wealth funds, but don't let that channel your thought into particular strategies.
Mm-hmm. Our next question, and maybe Tanya, you can jump in on this too. Can you talk more about the virtual elements of the challenge to supplement the main competition?
Yeah, sure. Happy to. So essentially, we know that virtual formats can feel a bit impersonal at times. And they're just, the opportunities to connect can sometimes be a little less in a virtual format. And so what we really wanted to do was to spread out the timeline of the competition a little bit to still allow for some meaningful opportunities for the participants to connect among themselves, but also the participants to be able to connect with the sponsors. And so right now, for example, what we're working on is launching an info session series, whereby some of our top sponsors will be running info sessions for about 30 minutes each. And, they will be telling you more about their company, the culture that they're cultivating within their companies, their values, and so on. And you'll have 15 minutes at the end to be able to ask questions. So we think it's a great way for you to get to know our sponsors a little bit better. And for those of you that are, outside of Canada or outside of North America, you get to hear from some of these asset managers in North America that you might be interested in and whose business model might be of interest to you as well. So we have that planned. Then through October, we'll be launching a speaker series. And once again, it will be animated by some of our sponsors. So some C-suite executives of some of those big names like BlackRock, like CBP Investments, and so on. And they'll be delivering talks on topics either related to the case or related to some topics of major importance in the economy right now. And so we're working on that as well. We'll, of course, have the mentorship program, and then closer to the competition, to the main event itself. So during that 2-day event period, you will be able to enter sponsor booths. So they'll have virtual booths running pretty much all weekend with recruiters present. So you can go in and network with them. And we'll also try to have a few events for participants only. So, a few chat rooms where you can talk to each other, exchange ideas, and also have a bit of fun. So, yeah.
Just a few things to add on to that. By the 2-day event, we mean the semifinal and final rounds in November.
Yes.
But one other point just to mention is that all our sponsors come to the MIPC not to just recruit students for their North American offices, but rather all their offices around the world. It's almost pretty much most of our sponsors. They have offices across North America, across Europe, across Asia. So they're looking for people in all of those different offices, not just for example in Canada. Next question for Professor Betermier. Do you have any suggested readings for topics on portfolio management as relevant to the case?
I can get back to you on that. I think what we'll do, because there's several questions along that front, asking for potential templates of reports, potential readings. What we will do perhaps in the next week or so is send an email with interesting reading materials that are not necessary. But for those of you, especially following on the questions that you have, will be useful. So give us a week and we'll compile that.
Yep. If you have any more questions, please feel free. Otherwise, we can wrap up the webinar if there's no more questions in the next 30 seconds or so. Just make sure I didn't miss any.
Well, best of luck. We're going to look forward to seeing what you can come up with. It's a very important topic, and I'm convinced that some of the winning solutions will potentially go above and beyond the MIPC itself. We're actually working right now on making those proposals available to a broader community than MIPC. The idea being that when you have so many smart university students around the world working on these issues, good ideas come up. And so that's the way we're looking at this edition as well.
Mm-hmm. So if there's no more questions, well, if anyone has any other questions that we didn't address here that maybe we think of later, please feel free to email any member of our team, and we'll be sure to help you out. Otherwise, thank you all for joining us today. We hope this was helpful and insightful for you, and will sort of help you get started on your proposals that you'll be developing over the next 3 weeks. With that, yeah, thank you all for joining, and have a good rest of your day and week. Take care.
Good luck.
Thank you all. Bye-bye.